President Trump is vowing to buy a Tesla after the company's stock plunged.
That could extend its record-losing streak to 9 straight weeks, dating right back to the inauguration. And that, plus protests at dealerships around the country, is even getting the White House's attention.
Tesla, the electric vehicle maker owned by Elon Musk, is warning the U.S. government that American exporters could be harmed.
Tesla's stock continues to slide amid a political backlash against Elon Musk. We'll be joined by one of the company's long-term investors.
Tesla faces unprecedented challenges amid political and economic turmoil. Tesla, once an untouchable force in the electric vehicle EV industry, is now facing serious setbacks. The company, which once dominated the market with its groundbreaking innovations, is now grappling with a sharp decline in stock value, financial instability, and shrinking sales in Europe. A combination of factors, including new tariffs imposed by the Trump administration, political controversies surrounding Elon Musk, and intensifying competition have shaken Tesla's once unshakable reputation. Tesla stock takes a historic hit. In recent weeks, Tesla stock has suffered a near-record decline due to growing global uncertainties. The turbulence began with Trump's trade tariffs and was further intensified by Musk's political stances in Europe. As a result, Tesla faced a massive sell-off on Wall Street. The U.S. Secretary of Commerce even issued a warning about Tesla stock, which triggered further panic among investors. Adding to the company's woes, Tesla is also feeling the impact of Musk's influence on public perception and increasing competition in Europe, particularly in Germany. In January and February, Tesla sales in Germany plummeted by nearly 70%, a dramatic drop that reflects the company's dwindling market share across France and other European nations. Several factors contribute to this downward spiral. U.S. trade policies, Musk's political statements, aggressive price cuts in the automotive industry, and a shift in European consumer preferences away from Tesla. Since the beginning of the year, Tesla's shares have been on a steep decline, leaving investors wondering whether this is a temporary panic or a deeper structural issue. Competition from Chinese and European automakers, rising raw material costs, and Musk's controversial public remarks have all combined to weaken Tesla's standing. Even an attempt by the U.S. Secretary of Commerce to boost confidence in Tesla stock backfired, causing shares to plunge further. Investors have begun to question the government's involvement in the market and whether Tesla's once promising trajectory is now in serious jeopardy. Alarming numbers: a 53% collapse in stock value. Tesla stock has plummeted nearly 53% since the start of the year, shocking shareholders. According to Bloomberg, this decline became even more pronounced in mid-March, with Tesla stock losing up to 7% in value in a single day. By March 14th, Tesla's market capitalization had fallen from $770 billion to $635 billion, marking a nearly 20% decline in just 1 month. The Royal Bank of Canada lowered Tesla's target stock price from $220 to $175, citing concerns over mounting competition in China and Europe, as well as Musk's increasing focus on Twitter instead of Tesla's core business. Musk has long been at the center of political debates, and recent comments by the U.S. Secretary of Commerce only added fuel to fire. The secretary suggested that both Elon Musk and Tesla pose a risky investment, a statement that triggered an immediate 6% drop in Tesla's stock price. This decline was further exacerbated by the ongoing trade war between the U.S. and China. Trump's tariffs on Europe, Canada, and China, imposed under the banner of protecting American industry, have increased Tesla's supply chain costs, both in production and sales. Meanwhile, retaliatory tariffs from these countries have made Tesla's international sales more expensive, further straining its revenue. However, the most concerning picture for Tesla is unfolding in Europe. Reports from Electrek indicate that Tesla's electric vehicle sales in Germany fell by 70% in January compared to the same period last year. Given that Germany is Europe's largest automotive market, such a steep decline signals significant trouble for Tesla's presence on the continent. Deliveries of the Model 3 and Model Y are reportedly far below expectations, according to French and Italian media. European consumers are growing increasingly disenchanted with Musk's political stances and controversial Twitter activity. A report from Euronews suggests that while other EV brands are experiencing growth, Tesla is moving in the opposite direction, Investors are now not only worried about Musk's political controversies, but also about the company's unclear long-term strategy. A statement from a U.S. Secretary of Commerce that Musk is intertwining his political actions with Tesla's corporate decisions has been perceived as an official warning, leading to an even greater sell-off of Tesla stock. Between March 14th and 16th, Tesla's market capitalization reportedly lost $70 billion. A crisis in Europe. Market share is vanishing. Tesla's struggles in Europe are no longer just financial. They have also turned political. Reports confirm Tesla's declining sales in key European countries, with Germany's market contraction of 70% hitting the company hard. The competition in Europe has intensified, with major automakers such as Volkswagen, Renault, Stellantis, Hyundai, and Kia ramping up their EV production. At the same time, Musk's repeated political clashes and social media controversies have alienated European consumers. Many customers once loyal to Tesla are now turning to brands they perceive as more stable and socially responsible. Additionally, Trump's tariffs have created further obstacles for Tesla. While the company initially sought to maintain its competitive edge by integrating production and sales networks in China and Europe, increased logistics and customs costs are now eating into Tesla's profit margins. European policymakers are also taking measures to protect local car manufacturers, placing Tesla at a disadvantage. Meanwhile, Chinese EV makers such as BYD and NIO are aggressively entering the European market, creating even more pressure on Tesla. According to Business Insider, Tesla's 53% collapse in global sales has been accelerated by competition from these rising Chinese brands. BYD, for example, is making a strong push into EV-friendly countries like Germany and Norway, further tightening the competitive landscape. Is the Tesla bubble bursting? For years, Tesla's stock value was inflated by the company's future growth potential rather than its actual profits. Now, as rival brands increase production and expand market share, Tesla's status as the unrivaled EV leader is being challenged. The pandemic-induced supply chain disruptions, semiconductor shortages, and rising raw material costs have further strained Tesla's ability to remain competitive. At the same time, Musk's erratic public behavior and clashes with European leaders are worsening the company's public relations crisis. Reports also indicate instability within Tesla's management, with several high-ranking executives departing the company. In Europe, particularly at Tesla's Giga Berlin factory, reports suggest that Tesla is struggling to meet production targets due to regulatory issues and labor challenges. Musk's frequent spats with European politicians on social media have also alienated lawmakers and regulators, creating additional obstacles for Tesla. A long road ahead for Tesla. The next few months will be crucial in determining Tesla's future. If the company continues to see declining sales in Europe and struggles in China, its global revenue targets may not be met. Some analysts believe Tesla might shift production focus to Asia, but competition in China is also heating up.